Are you hesitant to buy gold because it might fall further? In the next few minutes, I'll show you the most important things you should know before buying. The idea is simple. When you buy something, you need to be confident that it's in a good price range and has a sound technical value. This ensures two things. First, that if you buy now, it won't fall further. And second, that if you buy now, the price won't drop. In reality, gold is still in a negative trend, and the decision to hold interest rates steady is a negative one for gold. What made matters worse, of course, were the statements from 9 members of the U.S. Federal Reserve, who expect interest rates to be raised by 1/4 point once, twice, or even 3 times, as one member stated. This is what has caused gold to experience significant volatility. In summary, the technical analysis of gold and silver can be summarized in one word. Both are in a weak position and on a negative trajectory that portends further declines. Perhaps what has slightly improved the situation is the electronic agreement reached regarding the truce in the Strait of Hormuz conflict, which offers a glimmer of hope. A second glimmer of hope emerged. This development might alleviate inflation, given the influx of oil and the end of the crude oil crisis. All of this would contribute to improved U.S. economic indicators, potentially leading to a shift in Federal Reserve expectations in the coming months. However, overall, this is the current state of gold. Let's summarize. Firstly, prior to 2010, some banks began divesting their gold reserves, or a significant portion of them, because it was a non-yielding asset, and they needed liquidity. But a radical shift occurred in the last decade, specifically after the COVID-19 pandemic. For 4 consecutive years, central bank purchases exceeded 1,000 tons, record figures. Faced with these numbers, one must pause and reflect. This buying is certainly not random, and the eagerness of banks and institutions to acquire gold is not arbitrary. Rather, it is a calculated move based on solid foundations. Don't assume that gold's rise above $5,600 was driven by speculators. It was fueled by institutional buying, as banks and other institutions continued purchasing even after it climbed above $5,000. According to the latest survey, and here I'm not referring to technical analysis, analyst opinions, or even my personal view, but rather the World Gold Council's most recent survey, central banks will increase their gold reserves over the next 12 months. Therefore, this isn't a typical bidding war. Remember this is an institutional consensus on the importance and significance of gold as an asset in the coming years. This should prompt you, as an investor, to stop asking the traditional questions. Has gold risen too much? Were these increases unjustified or unfounded? The short answer is, banks, major institutions, and hedge funds haven't stopped buying. So, the question you should be asking isn't, what is the price of gold today? How much is it worth? Has it fallen to the point of causing losses? But the most important question is, what asset will maintain its purchasing power when the digital and paper assets around us collapse or even decline?